one company that has not performed well, that was recommended in the channel, is Oriental Carbon and Chemicals Limited. So it was recommended by me, I think around 2019 at around 998 levels. It currently trading at 742 levels. The company it is one of the leading manufacturer of insoluble sulfur used in the manufacture of tires. So it is one of the sole manufacturer of insoluble sulfur in India. So the tire sector is not actually doing very well, and many companies like C8 also posted decline in revenues. So that is actually also the tire sector is a cyclical sector. It may not actually post the same kind of earning growth year after year, but you can see that if the stock price of the company in the last 3 years, it has actually risen. After my recommendation 992, it actually touched around 11687 in June 2019, and it actually made as low as 519 levels in March 2020. That was a good time to accumulate a company that was one of the only manufacturer insoluble sulfur. So from there, it's actually touched a high of around 1143 in June 2021. So the recommended my price that was recommended was exceeded in June 2021. But after that, once the earnings of this company deteriorated, the company's stock price has actually fallen to now it's trading at around 740, 770 levels. Based on the market correction, it's actually further corrected from around 1000 levels in 885, 945 levels in January. It has corrected to around 770 levels currently. So if you see the earnings of this company, so the sales has actually grown over the years from 159 crores to around 388 crores. In the 5 years, in 2018, the sales was 324 crores. Now it is 388 crores, but the net profit has actually dipped. So if you see the net profit in 2017, it was 54 crores. It increased to around 72 crores in 2020. And in 2021 it was 75 crores, but in the last 1 year it had actually had a dip in net profit, possibly due to their interest cost, because possibly due to the rise in crude oil prices, maybe one of the major raw material, maybe their raw material prices increased, that actually resulted in a lower net profit for this company. So possibly based on increased revenues, this company might increase the margins. Maybe if there is a correction in crude oil prices, and if the revenues increase future and there is a good demand for their products, maybe the company might be able to increase, if there are some expansion plans, and they might increase the revenues in future. So I am considering the sales growth that is report over the years. So maybe we can actually consider that the last 4 years the sales has actually increased from 324 to 388 crores, and the net profit has increased from 57 crores to 75 crores. Possibly we can actually expect over 100 crores net profit in the next 2 to 3 years in Oriental Carbon, and we might get back the price of around 1000 levels, 1200 levels. But this time maybe we need to wait to for earnings to improve. It's always, I already mentioned that in all my channels, that it's always important to keep track of earnings when we invest in any stocks, and we need to keep stop losses for all our investments. And earnings is actually very important. Even if there are earnings, there I've seen that many companies in many sectors don't get this their actually the correct valuations. But earnings, if the company don't have earnings growth, the stock price can actually fall. So if the company is loss making, it can even fall to zero. There's no lower limit for a stock that is actually loss making. But this company is actually having a sound balance sheet. Is a bonus candidate with 10 crores, with balance sheet is debt free with 547 crores reserves, and only the borrowings of just 188 crores. It's a bonus candidate. It can be bought on every dips, but if you're actually able to get it much lower valuation, be good. But if you're actually investing in the current levels, we need to keep a stop loss, because we don't know whether the war will actually escalate to a wider conflict, and if the earnings growth actually will recover for the company based on the demand from the tire sector. So once we get a confirmation on whether the company is able to post earnings growth based on the quarter results, we can actually invest more in this company. But maybe if you're actually investing at the current levels, we should be willing to accumulate more on corrections.